Hello friends, welcome to the Banker Zone. In this session, we will learn about the exchange rate and the forex businesses. Let's start with the introduction part. See, world trade involves the exchange of a currency between the country for the purpose of import and the export of the goods and the services. So obviously, in two countries, the import and export business is happening. That's why we need to exchange the two different currency, right? So exporter convert the foreign currency into the local currency. Why? They are exporting the goods, so they are getting the foreign currency. So they will convert foreign currency into the local currency. However, the importer must similarly convert the local currency into the currency of the exporting country. That means what? The importer will import the goods. So when they import, they need the foreign currency to pay. So for that purpose, they will convert the local currency, home currency into the foreign currency. So this currency conversion process is referred as the foreign exchange. See, name it is indicating foreign exchange. You are exchanging the foreign currency with the home currency or the local currency is called as the foreign exchange. So foreign exchange facilitate the international trade. So to help the international trading activity, foreign exchange is helping. This module focuses on the understanding the role of a banking in this area, which is also called as the international banking. So in this unit, we will learn the international banking. So mainly the Forex. Now see the FEMA. FEMA stands for Foreign Exchange Management Act. So the Foreign Exchange Management Act is a primary act which controls the activity with respect to the foreign exchange. So when there is a conversion between two different currency, the activity is controlled by FEMA Act. So the Foreign Exchange Management Act FEMA 1999 Section 2 defines the Foreign Exchange Act. So FEMA Section 2 defines the foreign exchange. So as per this Section 2, foreign exchange means the foreign currency and which include. So simple meaning is there. Section 2 says that what is a foreign exchange? Simply it is the foreign currency and which include what? All deposit credit balance payable into the foreign currency or any draft, the traveler check or letter of credit, bill of exchange, expressed or drawn in Indian currency but payable in foreign currency. What do you understand that? Only one you remember, one word. As per the FEMA, any foreign currency is what? It is the foreign exchange or any currency which is payable in foreign. Any instrument, it may be the deposit, credit, balance, letter of credit, check, bill of exchange, anything. Whatever it may be, if it is payable in a foreign currency, it is the foreign exchange. If it is payable in foreign currency, it is the foreign exchange. Remember, very easy. If you are having the deposit, the credit balance or balance in saving or current account, if it is payable in foreign currency, it is the foreign exchange. If you are having different instrument, even the check, the letter of credit, bill of exchange, anything which is payable in foreign currency, it is the foreign exchange. So very simple meaning is that understand only whatever thing you are having which is payable in foreign currency, it is the foreign exchange. Now see, any instrument payable at the option of a drawee or the holder. That means what? You see, for example, if you are having check and you are having the option to get it in dollar or to get equivalent rupee. So if you are having that option to get in which currency, either in Indian currency or in foreign currency, or partially in Indian currency and partially in foreign currency, in that case also that instrument will be treated as the foreign exchange, Remember, very simple meaning. Anything you are having which is payable in foreign currency is the foreign exchange. And simply, if you are having an instrument which and the holder of the instrument is having option to get the currency foreign or the local currency or partly, that is also called as the foreign exchange. Okay, now simply broadly speaking, see, the foreign exchange is the all claims payable abroad. So whatever you are paying out of the country, simply it is the foreign exchange, whether constituting the fund held in foreign currency with the bank abroad or any bill or instrument, anything which is payable abroad. So simply in one line I have to say, what is a foreign exchange? Simply I will say all the claim which you have to pay abroad beyond the apart from the India, whatever you have to pay abroad, that is what the simply foreign exchange. Okay. Now see, what are the major participant in the forex market? So who can participate in the forex market? Means who can exchange simply the currency. First is the obviously RBI, that is the central bank, simply the RBI. So RBI or the central bank of any country which manage the forex reserve and mitigate the currency volatility to stabilize the own currency value. So obviously RBI is having the forex reserve. So they are having lot of dollars, right? So that means the foreign currency reserve is having with the RBI. Why they are holding that? Simply to mitigate the currency volatility and to make the Indian currency rupee stronger. Next is the commercial bank that facilitate the currency exchange for the client like SBI, HDFC, ICICI. They are facilitating the currency exchange. Or apart from that, they also uses the foreign currency for the purpose of investment or speculation purpose also. What is speculation? Means earning. Okay. So what is speculation here? Speculation means, see, if currency $1 is available at 80 rupees. So I know in future $1 will go to 82 rupees. So today itself I will purchase. In the future I will sell it. That's what speculation. Now what is the investment bank and the bank? So see that to transfer a fund globally using the forex market for the purpose of investment and hedging, that the banks or the investment funds are used. Okay. So investment funds also participate into the forex market for the purpose of transfer of fund globally. For example, say the Thomas Cook, very popular Thomas Cook, they are availing the facility of fund transfer across the border. Investment bank like Barclays, forex broker. So forex broker also participate into the forex. Here they serve as the intermediary among the various market participants. So name it is indicating broker means simply they will be the intermediary. The corporation, they move fund internationally for the purpose of investment trade and engage into the speculation in the forex market. So different corporations are there, right? Then that means different companies. The individual, even the single individual can utilize the forex market for the purpose of investment, trade, or the personal transaction also. Also, if they have to travel from one country to another country, they can exchange the currency. So in that way, we can say the central bank like RBI, the commercial banks, the investment bank or the investment funds, the forex broker, the corporation and the individual, these are the important major participant into the forex market. Okay. Now see, in most of the part of the world, the forex market operate 24/7. Okay, it is 24/7 market and is operating generally Monday to Friday. However, Saturday and Sunday is a holiday generally across the globe. Forex markets open throughout the day. 24/7 means what? Day and night it is operational. Forex market is closed in most of the country in Saturday and Sunday because it is operating Monday to Friday, right? So Saturday, Sunday, weekend. So 5-day working there. Okay. So globally, not in banks right now. Global holiday like a Christmas, there will be the holiday. Okay. Now very simple. See, interesting part is that in case of GCC country, that is what the Gulf Cooperation Council. In the Gulf country, simply market open on Saturday. Market open on Sunday, but closes on Friday and Saturday. So there is 2-day working, 2-day office there in the Gulf country. However, the office from Friday and Saturday. However, on Sunday, their market is open. Very important. For example, point of view also it is star question. Okay, in Gulf country, the market is open on Sunday and they are having 2 days holiday. Only on Friday and Saturday they are having holiday. Now, however, see, on Sunday, the GCC currency only are traded by the banks. Remember, see, it is interesting to note. For example, point of view, this is different beats, right? So Friday and Saturday they are having holiday. Sunday they will having the operation. However, on Sunday they will only trade the Gulf GCC country, Gulf currency they will only trade. Okay. So remember, Friday and Saturday holiday. Sunday is operational. However, on that they will only trade the GCC currency. That is what the Gulf Cooperation Council currency or Gulf currency in simple. Now see, the daily forex, see the huge amount of how much forex is being done here. See daily forex turnover is 7.5 trillion of US dollar. So this is very big amount, right? If we talk annually, then it will amount annually turnover is 2350 trillion US dollar is the annual forex transaction. So in exam they have also asked what is approximate daily forex transaction? It is 7.5 trillion US dollar. Annually it is 2350 trillion dollar. However, if we talk about the trade, that is what the trade happening between the internationally. The annual trade international is approx 22.3 trillion dollar as on 2021. So what I can say here that see this is the trade and this is the forex transaction. So you can see that forex flow around 100 times of the trade. So what I can say, forex is having more bigger market than the trade, right? So forex market is almost 100 times bigger than the trade. Remember 7.5 trillion daily US dollar. This is important for also again your star question for exam point of view. Okay. Now, what are the characteristics of the Forex market? See, very simple. Forex market is a 24-hour market. There is Monday to Friday, it is working 24 by 7. A 24-hour market, not 7, because Monday to Friday is only they are working. Today holiday. So, it is over the counter market. What is OTC? OTC means over the counter. Over the counter means OTC. What is OTC? OTC means simply like you want some medicine. You go to the pharmacy shop, right? And you give money, you ask, give me one paracetamol tablet. So, over the counter it is available. That is means what? Easily it is available. Over the counter means easily. A global market, it is a global market. There is no any barrier or no specific location. You can purchase any currency across the globe, right? So, Forex market is supporting the large capital and the trade flow for the purpose of different investment or any speculation. It is a highly liquid market, means almost for every 4 seconds, the value of dollar and rupee is changing, right? So it is a highly fluctuation in the currency rate. So for every few seconds, the value is changing. Almost for every 4 seconds, the value of a dollar and the rupee or one to other foreign currency is changing. Settlement is affected and can be influenced by the time use, obviously. So in India, what is time now? The time in the USA will be the different, right? So their operation may, so due to the time differences in two country, the settlement can be affected, right? Due to the time zones. Market affected by the government policy and the controls. Obviously, every country has the sole power with the government. So government can control the market. So these are some characteristics. Now see some easy fill in the blanks. See, the term foreign exchange is used to denote dash dash as well as dash dash of one currency into the another. So term foreign exchange is used to denote the foreign currency, as well as the exchange of one currency to another. So foreign exchange means what? Foreign exchange means simply the foreign currency. So exchanging one currency to another means simply the foreign exchange. Okay. The exchange rate of a major currency are influenced by just a second. So for major currency, every 4 seconds the rates are changing, right? What is the rate for $1 to Indian rupee? So after 4 seconds that will be changed, right? So it is for every 4 seconds the rate is changing. Now say true or false. See, the forex markets are a dynamic and the round the clock market. So it is true. It is characteristics of the forex market. Forex markets are not affected by the government policy. It is wrong. Government has the ultimate control over the forex, so obviously do affect. So it is wrong. A large part of the total global forex turnover resulted from the global commodity trade, whether it is true or false. So it is again the false statement. Why? See, forex is 100 times the trade. So we can say the forex is not generating from the trade, right? So forex is 100 times bigger than the trade. So this is again the wrong statement. So forex is not generating from the trade. Forex is not a part of a trade because forex is more than the trade. It is 100 times of the trade. Okay. So it is again the false statement. Okay. So now see, factor which determine the exchange rate. So what factor basically determine the exchange rate? See, for $1, you have to pay say 80 Indian rupee, right? So which factor decide that currency rate? So first is the fundamental factor. So these factors affect the basic economic and the monetary policy of the central or of the concerned government. So see, what policy the central government is making, the government of that country is making, that decide that fundamental factor. So fundamental factors normally affect the long-term exchange rate, long-term and short-term, right? So if we change some factors fundamentally in long-term, they will affect the exchange rate. Okay, so mainly they are having long-term effect. Now see, balance of payment is the first factor. Balance. What is balance of payment? How much money you are receiving in your country and how much you are paying out of your country. That is the difference between inflow and the outflow is called as the balance of payment. And how much payment as a balance you are having? Simply, right? So generally, if you are having surplus in a balance of payment, then your stronger home currency will be there. However, if there is a deficit into the balance of payment, your home currency will obviously decrease or depreciate. Next is the economic growth rate. So obviously high growth rate means more production and more export will be there. More export means you will get more foreign currency. So there will be increase in the value of the home currency, right? So export is good, right? Next is the fiscal policy. What is fiscal policy? Means it is simply the policy decided in the budget, like budget. Okay. So if the policy is expansionary policy means what? More spending and taxes will be less. So if taxes are less and government is spending more, like investment in infrastructure, road, everything. So there will be the more factory, and more factory means more production, means more economic growth. So more growth means obviously the currency will get stronger. Like fiscal policy, monetary policy means it is generally decided by RBI in India. So central bank control the interest rate and the money supply. So monetary policy, right? We have discussed in detail. So monetary policy, every quarterly I think RBI declare the monetary policy, deciding repo rate and etc. Repo rate, vice repo rate. Then we are having the SLR, CRR, right? That is the monetary policy part. So that impact the interest rate and the money supply, and so obviously that will also impact the value of the currency. That is, the monetary policy can also be the fundamental factor which determine the exchange rate. Next is the interest rate. So obviously high domestic rates are offered there. In that case, that will attract the more overseas capital, and thus investment will be more. So currency will appreciate. It is happen only for the short duration. For short term, it is very important to note that for short term, more interest rate, more capital inflow, so currency will go up for short duration. However, in long term, high interest rate slow down the economy will slow down, and they will weaken the home currency. It is very important for exam point of view. See, high interest rate for investment or anything, for short term it is good, but for a long term it is bad. For long term it is weakening the home currency. For short term it is good, it appreciate the home currency. Okay, next is the political stability. So obviously political stability is likely to lead the economic stability. So if there is politically stable government is there, then economic stability will be there and people will invest more. So it will be good for the home currency. However, take the example of say Nepal or the Pakistan. There is no political stability. Why people will invest there? They know nobody is no stable government, right? So political stability is very important. So what are the fundamental factors? Simply the balance of payment, economic growth rate, the fiscal and monetary policy, the interest rate, and the political issue or political stability. Next is the technological factor. Means what? Simply the government control. What is technological factors? Like government control. See, the restriction on the currency from trading or exchanging weaken the value of currency. So if government has made some restrictions, you cannot trade the currency, right? You cannot exchange the currency. In that case, the value of the home currency will depreciate. So free movement will keep the rate stable, and freedom or restriction on the capital movement also influences the exchange rate. So simply, if government have given some freedom, the currency will be stable. Next, speculation. What is speculation? Very simple. See, people who interested in investing in the currency of a one country aim to do when its value on a rise in the eyeing profit. Means simply, see, if $1 today is say 80 rupees. In the future, I think that $1 will be 90 rupees. So I am getting 10 rupees per dollar profit. So that's why I am today itself I am buying at 80 rupee. In future, I can sell it at 90. So in my eye, the currency, the foreign currency, dollar will appreciate. However, the Indian currency will depreciate. So this is my speculation. I am speculating that. This is what the simply speculation. So speculation is one of the important factor which determine the interest rate. Okay. So more demand for the currency, higher its value, raising the exchange rate. See, very simple. When expecting the currency depreciation, like $1 is available for 80 rupees. Now depreciation means $1 is more costly for Indian rupees 90. Okay. So speculator buy the base currency. So I will buy the dollar, right? And I will sell it at a higher rate. I will sell it at rupees say 90. So post depreciation, I will earn the 10 rupees. Okay. So very simple. What is speculation? Earning at a low price, selling at a high price. The difference is simply the speculation. Okay. Now see some questions. See, OP Sodhani Committee report was submitted in which year? OP Sodhani Committee submitted a report in which year? 1990, 95, 2001, 2003. So correct option here is 1995. So OP Sodhani Committee submitted its report in June 1995, making recommendation that reform to deepen and widen the Indian foreign exchange market. So to make a reform into the Indian Forex market, the OP Sodhani Committee came into picture. They submitted the report in 1995. Next question. Which of the following is not a participant into the Forex market? So we have just gone through the market participant. So the individuals can participate, even the banks can participate, commercial banks or the investment bank. Broker can be the participant. However, so correct option will be D, none of the above. See, all listed alternative are the participant in the Forex market. So D is the correct. Next question. Under the Forex retail, which is the maximum single transaction limit? So what is the maximum single transaction limit? This is the star question for your exam point of view. So 1 million US dollar, 5 lakh, 5 million US dollar, 10 million US dollar. So correct option here is the 5 million US dollar. This is the again star question for your exam point of view. So under the Forex retail, the word retail is also important here. The maximum single transaction limit is 5 US dollar, 5 US dollar million. Hence the option C is correct. Next question. In which year the LRS, liberalized exchange rate management system, introduced by RBI? So RBI has introduced the liberalized exchange rate management system in 1991. Okay, remember the liberalized exchange rate management system was introduced by RBI in 1991. Hence option E is correct. So friends, you can subscribe us on the YouTube. We are having the Android application. The name is Bankers Zone CIB, which is available at the Play Store. You can download the application from Play Store so that you will get the app. And in app, we are having the full courses. You can enjoy the full course, study, and happy learning. Thank you, friends.